Hey, Joshua Phillips here with Churchill Mortgage, and I wanted to come to you with a post-election mortgage rate market update. As a 26-year mortgage professional, as I'm watching the election results, one of the main things I think about, of course, is what's this going to do to mortgage rates? What's this going to do to the real estate industry? Now, this is just a snapshot. This is just what's happening the day after the election. Obviously, who knows what's going to happen in the coming weeks and months, but I want to give you the initial snapshot. Now, I'm going to go through several headlines. The first one here, mortgage rates surge higher on Trump victory. Unfortunately, this was kind of to be expected. I've talked about this in previous updates. In 2016, when Trump was elected, we saw mortgage rates go up quite a lot for a period of time. Now, there's reasons why. The stock market, the Dow Jones up 1,500 points today. Basically, the economic system, the businesses and such, think that Trump is going to be good for the economy. And that's great for the economy. But that also means that the economy is going to be stronger, perhaps. And therefore, the Fed may not cut the Fed fund rate. So we may see rates, stay higher for longer than we would ideally like. Now, let's move on to the second headline. This is a busy week. Second headline here. The Fed is meeting tomorrow, which is crazy. What a week we're having. But I mentioned this in previous updates. The Fed is actually expected to cut 25 basis points tomorrow afternoon. So expect to hear that news. If you've been watching these videos for a while, you know that the Fed fund rate is not mortgage rates. So we will not see, I don't think we're going to see mortgage rates go down tomorrow. Certainly not go down 0.25%, and certainly not based on the Fed cut. Now, there's a lot of talk around what the Fed's doing. Some people think they probably shouldn't be cutting at this point, and it's very unlikely we're going to see many more cuts for a little while. Again, back to the economy and the strength of the economy. So, but you're probably going to hear about that news tomorrow. Moving on. So what you can pay attention to as a consumer is the 10-year Treasury yield. We want the 10-year Treasury yield to go down. You can see here, this is a one-year chart. Anybody can see this on CNBC. It's at the top, bonds, 10-year Treasury. So, we saw the 10-year Treasury go up into the spring, and then mortgage rates were improving. We saw the yield go down to about, I think, 3.5% at the low, 3.6 maybe. And since then, what's happening? The bond yield is going up, and it's really jumped today. 0.149 is a lot. That's a big move higher with bond yields. And so again, that's just another signal that mortgage rates are going up. I always tell consumers, if you want to watch one thing that you can see, it would be the 10-year Treasury yield. We want to see it go back down. We want to, if you're looking to time a good time for refinancing, you want to look at that 10-year Treasury yield be at 3.5 or below. That's probably going to be the next really good time to refinance. So, final chart. This is mortgage-backed securities. I will always show this. As I always say, every professional loan officer in America has this on their computer open every day. Security prices are where mortgage rates derive their value. Red is bad, green is good, and the higher the security price, the better. Once again, similar thing where we saw mortgage rates, security prices. We saw security prices improving on mortgage-backed securities up until September 17th or 18th. We've seen things get worse. Now, I will say the silver lining today in mortgage-backed securities, we're down 17, which honestly, I thought we could be down 50 basis points today. Only down 17. And last update I did last week, we talked about how maybe this is what we call a line of support. And you know what? We saw things dip down earlier. I think maybe we were down 40 or 50 basis points, and we've popped back up, and we're only down 17. So that's actually pretty good. So we still may be seeing, hopefully, the high end of mortgage rates, which have, for the most part, come back up to 7, a little higher than 7. Just depends on the situation you're in, where mortgage rates are. Possibly in the 6s on a 15-year, depending on if you're paying points. There's a lot of factors. And I'm always happy to have a conversation with you about your specific mortgage needs. But for now, Trump is going to be our president. That looks good for the economy. That is currently hurting mortgage rates. I do feel positive about next year. Real estate, mortgage rates. I think it's going to be a great year for real estate. I think we're going to see more home purchases, maybe more people putting their house on the market. Hopefully, mortgage rates slowly improving. I really believe 2025 is going to be a great year for real estate, for purchasing, hopefully for refinancing. So hang in there. I'll keep updating you as there's more news. I may come out with an update on Friday, or we may wait a week depending on kind of what the market's doing. Have a great day. Bye.